Good morning, everybody. It's another hot day in paradise with Jimmy Dag and Ruthie Rocks. Hey, Jimmy.
Good
Hey,
morning.
Jimmy.
Good morning. I'm here.
You have a quote for us today.
I do. Two things inspired this. Number one, the book you gave me, um, You Happier. I'm on page 150, 147. So I'm halfway through. It's a 300-page book. I'm halfway through it. Um, but I have a daily reading that I do from a lady named Sarah Van Brethnick. And as a woman, she studies a lot of other women and their thoughts and their inspirations. And she's bought magazines back to 1900 and, Good Housekeeping and stuff like that. And this morning, the quote I read, there's a lady named Barbara Sher, Sher, that wrote a book called Wishcraft. Not witchcraft, wish. Like, what do you wish for?
Yeah.
What are you really
Right.
wishing for and how to make it happen? And she said, we need dreamers and we need doers, but we also need dreamers that are also doers. And I thought that was pretty profound.
Yes,
So
we
I ordered
do.
a copy of the book.
Oh, super. Yeah. I looked over the Dr. Amen's seven items of how you address happiness in your life, and it's not easy. It's not easy if you
No.
look at what he wants you to do. Right. And it does rearrange your thinking.
Well, are you going to take the 30-day challenge?
I started it. I'm on day one.
Okay.
I didn't get past day one yet. And I
I didn't
started
know it
it
was
Sunday.
$49. It's
Oh,
not free.
you don't have to do the 49. It isn't?
The one that I went to brain assessment first. That was free.
Yeah,
And it
right.
tells you which of the 16 brain types you have. But then
Oh,
the happiness challenge, if you go to the next step, that's $49. And that's
yeah,
a
I think you're
30-day
right.
thing,
Yeah,
15 to 20 minutes each day. So if
yeah.
you're on day one, then you paid him $49, I
Yeah,
think.
you're right. Yeah, I think you're right. Yeah.
So,
Obviously, I need to keep better track of my money.
well, if you're on day one, I guess I better jump in there. Otherwise, I'll be way behind you.
Right. Jimmy, the market, oh my goodness, it's really shifting. It's really shifting. We have 9,644 listings. That's not the bad news. That's good news. But the kind of not good news is in um, July, we were selling 146 homes a day. Okay. In August, it went down to 88, and as of today, it's 47. Now, I know it's early in the month, and I know we had a holiday, so we'll just see. I just want this number to go up, and I want everybody to be aware of this. Now, part of that is, Jimmy, that the investors have pulled back. And I understand from a recent source that, and we're going to talk about this today a little bit. I think I have this on tape, that Blackstone, the hedge fund, has pulled back from buying houses as assets. And so that is probably going to affect our market as well.
Well, didn't you tell us that investors represented about 10% of the market? Wasn't it 10 or was it higher than that?
Oh, it was 30.
30.
It was 40. It was 33. Now it's around 30.
Well, then they're still not that far off if they're only at 30.
30%.
If they're 30%, that's a pretty big chunk of the market still then.
Yeah, but it's gone down. It has gone down a little bit. I'm just saying I see the trend starting. We'll see.
And 30% of 47 sales is a lot less sales than 30% of 140 sales.
Yes.
So
yeah.
It's still a lot less numbers, units.
Right.
You can't take percentages to the bank.
No, exactly. I know that. 46 of the homes that we listed were 450 and under, and 450 is the new median. And 2,651 homes on the market are single family are under 450 or under, I should say. So we've got 109 days of inventory, which isn't bad. That's three months, give or take.
Well, so 190 days of inventory?
109.
Oh, 109. Okay, yeah. So what does that tell me is that it's a great time to be a buyer.
It is. It
It's
really
smart
is.
to be a buyer right now.
Yeah, don't wait and buy real estate, buy real estate and wait. And John had a phone call with an investor that's doing a 1031 tax exchange today and this morning, and his partner is thinking that they should wait. I said, wait for what? I said, you're a long-term investor. They've been investing with us since 2008, and over time, markets go up, they go down. You didn't cash out when they were high. You know, that's my point. They didn't cash out when they were high. They just kept hanging on because they're getting a great cash flow, a great return on their investment. And I don't see the rental market actually going down that much because people are still moving here.
Right, right.
We still have jobs.
And that's a really interesting dynamic to watch. The rental rates, are they actually going down the way the average sales price is going down? Because people that have to sell, it's a way different dynamic than people that have to rent. If it's vacant for a month, it costs you, you know, a little bit of money, but it's not like you're losing $20,000-$30,000. You're losing a month's rent.
Yeah. Yeah. Meaning, explain that to be clear to everybody.
Well, just if I see prices going down $10,000 a month and I'm thinking of selling, I'm thinking I better get my house on the market right now because it's going down 10. But if I lose a month's rent, it's $1,000. That doesn't hurt as much.
No, right. I see what you're saying. Okay. I want to show everybody the only other point, the $1 million homes, we were at a high of 4.9. We're now at 4.88. So that hasn't really changed. They're still selling. We've sold $1,216 million plus homes this year so far. We did 1,672 last year, and the year before 618. So that market is still holding true. Let me hide this, and I want to show something else here. This I thought was, whoops, where'd it go? Hold on, let me get us together here, and let's show this. Come on, okay. So here we are in September at the bottom at 450. And if you look at December of 2021, we were at 430. October of 2021, we were at 410. Where on that chart do you think we're going to land?
I think we're going to get to 435, which is what I had said earlier. I think 435 is the number before we start leveling off, and I don't see it going below 435, but we'll see.
We'll see. Yeah, we don't have a crystal ball. We don't know. And I'm not so I don't. What do you think about the inflation impact on what's going on in the real estate market? Because, you know, real estate generates, I mean, it's 18% of the economy, and people go out to Home Depot, they go buy new furniture, you know, they fix up their houses, whatever. It's not just the house itself. It has a whole circle of things that sell and people buy.
Well, inflation and stagflation are two different things, and Buffini talks about that on one of his programs, the difference between inflation and stagflation. And inflation is the reason I believe we're not going to go much below 435, is because the people that are saying, well, we're not buying real estate as assets anymore, when they see the inflation stay at 6, 7, 8, 9%, they're going to say, well, hell, you know, we got this cash sitting here. The stock market is so unpredictable. In fact, there's stock market crashes. We can't put it in stocks. Where else are we going to put it? What other asset can we put in that's going to benefit from inflation? Because stocks don't benefit from inflation the way houses do.
No,
so
absolutely not.
I think those investors that have left the market are going to come back in the market. And I think it's going to happen somewhere around 430, 435. They're going to say, you know, prices are down $60,000, $70,000. Let's just buy a couple now and see what happens. And it's called dollar cost averaging. And every major investor understands dollar cost averaging. You buy when prices are going down because it averages out that you're paying. It's just a mathematical, it's like reversion to the mean. It's a mathematical truth that the big investors understand dollar cost averaging. And that's why I think around 430, 435, they're going to come back in the market and say, look, with inflation where it is, stagflation, prices are going up, wages are not.
Yeah.
Prices are going up, and wages are not keeping track with that. So regardless of what inflation is, if prices are going up faster than wages, that's stagflation and costs people more to live.
Yeah. Good point. I want to play this little, let's see here. So this is somebody that is on TikTok, and he's got something to say about, and I'm going to mute us, otherwise they'll hear us. So here we go. I'm going to mute us.
Huge news in the housing market. Blackstone is pausing buying in 38 cities. If you don't know who Blackstone is, they're one of the largest corporate buyers of single-family homes nationwide, and they have roughly almost $1 trillion in assets under management. With Blackstone taking a pause in the market, one, demand is going to be severely reduced nationwide, and I think it's going to have a ripple effect throughout the institutional buyer space. I think that even more companies are going to start taking pauses because they're going to look at Blackstone as the leader in the industry and say, why are they taking a pause? Maybe we should too. Analysts have already been talking about how quickly this market correction / crash has been happening. And with institutional buyers dropping out, it's only going to pick up speed. If you like this content, like and follow for more.
What do you think about that?
Well, we knew it was coming. I don't think it's any big surprise. And again, I think Blackstone is putting this out there to cause prices to go down a little bit more so they can jump back in. I think they're leading the market. They've been $1 trillion that's a billion millions. No, maybe it's 1,000 millions. Let's see, a billion. No, a billion is 1,000 millions. So a trillion is a billion. It's a million millions. That's what it is. It's a million. They got so much money they don't know what to do with it.
Yeah, exactly. That's $1 trillion is a lot of money. It takes 30 years to count it dollar by dollar. It always amazes me. I can't even fathom what that is. So this is, and you find these things in all parts of, this was from TikTok, but you find it all over the market, YouTube and what have you. And I also found this, which I thought was interesting, exploding inventory. This is on Reventure. Las Vegas is number 13, I believe, as far as exploding inventory. And Phoenix is like way up there. And I heard on other TikTok shows that they think Phoenix is going to be in trouble. I don't know. I mean, they think that Tucson and Phoenix both are going to be in trouble. So we'll see. I'm not familiar enough with the market to speak intelligently about it, except to show that it is the number one city where inventory is just increased 177%. That's unbelievable.
Yeah, I did watch this guy's report also, and Phoenix was the darling of investors and got overheated like we did, more than we did. So they're going to pay a bigger price for that.
Yeah. Well, we'll see. And the thing about that is with a lot of inventory, the prices are going to be adjusted in Phoenix.
Right.
So I don't know if that'll bother us or not.
I think all markets are local. We've had this discussion in the past, 2008, 2009, 2010. All markets are local. And when somebody says, how's the market? They don't mean in Miami. They mean in Las Vegas.
Yes.
And they don't mean in Phoenix 13 times. We're number 13. We're not even on the top 10.
Right.
So how's our market here? That's really when they say, how's the market? And they don't even mean Las Vegas. They mean their neighborhood. How's the market in Red Rock? That's really what they're talking about. And you know how the market is in Red Rock. That makes you the market hyper-local expert.
Yes, exactly. And
Planned Farm Database. Planned Farm Database.
If everybody just listened to us, Jimmy. I mean, when I look at the number of sales per day, 47 sales per day, and we were like down almost a third of agents getting paid. I mean, that just doesn't affect the agents. That affects us that own brokerages.
Yep.
And I know that the agents can farm and do lots of things. And so what do brokers do?
I think brokers are going to have to start joining forces. There's going to be a lot of mergers and a lot of closures and a lot of new directions, because some brokers, they're going to say, look, I might as well go. If I could sell 6 houses a year, I'd make more money as a salesperson than I'm making as a broker. 6 houses, that'd be 60,000. I can sell a house every other month. Come on.
Yeah. So I think we're going to see, I think the fallout really hasn't started to hit the ground yet.
Not yet. But
Not
we're going
yet.
to see it before the end of the year.
Yes, we're going to see it. I have one other thing for today, and that is that we are having a class tomorrow on understanding and presenting the purchase contract, and how there's 15 ways to cancel in the first 5 pages, and your buyer needs to know these things. It's an excellent class. One of my favorites. In contracts now, you have to take 6 credits instead of 3, and I think this is one that people should definitely look into taking.
Well, I'm going to throw a little bit of a bonus material in this class this time, and it's that if we don't recognize how our buyer's brain works, and as you and I talked about earlier, there's 16 different brain types. If we don't know what their brain type is, we might not be on guard for when they decide, oh, I got buyer's remorse so bad, I'll just back out. We need to really understand our buyer to make sure this deal stays together, because they see these numbers that you and I are talking about. Average price. Oh, shoot, I should have waited another 3 months. I could have got it $20,000 less. We need to understand their brain and how it works. And there's a series of questions that I'm going to kind of unleash on the students tomorrow and say, look, how do you think your client would answer these questions? And if you had to answer for them, what would you say? And are you ready for this to happen? Because when the deal goes in escrow, as you said, there's a dozen ways for it to go sideways. And it really comes down to what the buyer thinks. If the buyer thinks, I should have waited, and they all think that to some level,
Yes.
what do they do with those thoughts? That's the question.
Exactly. Um, I think that we talk about skill level all the time and how people need to increase their skill level. This is a perfect time for everybody. If you don't even need the CE, just take the class to hone your skills. And I think we both are of like minds. That's what we think we should be doing when we do the CE classes, is giving people a way to increase their skill level, whether it's negotiating, purchase contracts, listings. Increase your skill level. And Jimmy, your classes are all about that.
Well, you and I both are always looking at, whether it's Tom Ferry or Brian Buffini or Grant Cardone or any of this TikTok, Glenda Baker, the people that you follow. You're always looking for people, and these people are operating at a level. They're getting to see a macro view that a typical real estate agent doesn't get to see. And that's what Brian Buffini said about his brother Dermot. He said, Dermot has a Rolodex of Dave Liniger, who founded Remax, and all these guys, Gary Keller. Everybody, when Dermot Buffini calls, they pick up the call and they talk to him, because they know he gets to talk. They won't talk to each other, but they'll talk to Dermot. And then Dermot goes and talks to Brian and says, here's what I'm finding on the streets. So he's like his sleuth that he sends out to find out what's going on in the world. And because Buffini's busy doing his 6 kids and his life and whatever. So he needs help. And he's got a really trusted advisor in his brother, who has built over the years a Rolodex of top minds and top visionaries in the real estate industry. And that's an asset and resource you get to tap into when you listen to Buffini.
Yeah. And I also, let's see, Tom Ferry had his summit. I was trying to think of the dates. It was the end of August, I think. Anyway, so I bought the live stream because I knew I wasn't going to be able to watch it during the couple days. Come to find out that you had to watch it when he was doing it.
Oh.
So I appealed to the chat bot in where I bought it, and I said, that I misunderstood, and so they are going to allow me. They are going to do an on demand of the summit, and they are going to let me have a copy of that. So at least I will be able to watch it and glean some more about what other people in the market, what they're thinking of doing in this. If you're not out there showing houses and you're not out there, handling your buyers from your listings and so on and so forth, you got to be doing something. So you might as well hone your skills.
Well, and I think both Brian and Tom, they bring other people into their seminars. I was in Anaheim a few years ago at one of Tom's success summits, and he brought on this lady that had just flown in from Australia to do her presentation. She's flying all over the world. She's an author, and her book was about marketing. And for an hour and 50 minutes, she just blew everybody's mind over and over again. And I didn't end up getting her book, but I have notes from the talk. And so he brings in people that are outside the real estate vertical that see these ideas that we may get so myopic in our vision because we listen to all these real estate people and they talk about real estate, but they don't talk about the bigger picture. And that's why I'm so grateful to you for bringing this book about You Happier, this Daniel Amen book, because it forces me to look outside of real estate. Because in this buyer's agent class, in this contrast class, I never thought about the buyer's brains. I never thought about that. Oh my God, maybe I should think about something different.
Well, to your point there, we are now doing a Wheel of Fortune spin for 2 books, one for Zoomers and one for people in the class. And tomorrow we're going to be giving away Gary Vee's 12 and a half and the book you just talked about You Happier. So yeah, so those are the 2 books for tomorrow's class that'll be given away free. And the books, I think Gary Vee's book is selling for $13, but You Happy are selling for $19. So if you win, you just about took the class for free.
Yeah. And if you read the books, if you get the content, I mean, Gary's is all about principles of life and morals and morality and ethics and how you live your life and stuff like that. And I read it, and it's very well written, very conversational, easy to read. You Happier is a lot more scientific, a little deeper to get through, but the principles in it are things that I know I need to work on. So
yeah, yes. Jimmy, we are doing our social media mastermind on Friday from 9:30 to 10:45. And we invite people to come. You don't have to sign up or anything, just come. But I think Kane likes you to at least email him. But, we have, I don't know, 8 or 9 people. So we have plenty of seats. In this shifting market, I think it's very important that people, agents, understand how they have to stay in front, top of mind. And with social media, I mean, that's what you have to do. And, it's social multimedia, really, because there's so many platforms and there's so many choices that you have to do to keep in front of people. One of the big things we're going to go over this Friday is the Google business page. And I don't think people realize the impact it can have on whether or not you get found by new people or whether the people that are working with you see you, and that just reinstills their know, like, and trust for you. So anyway, it's 9:30 to 10:45. It's right before Buffini. And I think I talked somebody into joining us. They didn't sign up for the first and second class, but I think they're going to join us. I said, just watch the first and second one. The third one, you can probably catch up if you watch 1 and 2 before you come to Fridays. But we have a great group.
I was totally inspired last week when I sat through that, the caliber of people you have there, the minds that are there, the vision and the exposure those guys get. You started the meeting, you threw a little pixie dust in the room, and the next thing you know, all these ideas started flowering. And I was taking notes as quick as I could, and I couldn't write everything down. And I complained to you at the end of class. I said, Ruthie, there's so much in here, I can't even write it down fast enough. And then you said, oh, we recorded it. Oh, good. Yeah. I'll have to go back and watch the recording now and look at my notes and put them side by side and see what I can start implementing. It's really implementation.
Yes. Education without execution is just entertainment.
Yep.
I love that. I say it all the time. Well, Jimmy, thank you so much for joining me today. And I know you'll be here tomorrow because we're doing a class.
Yep. And then I'll see you Friday. I'm pretty sure I have both the social media thing and the Buffini in my schedule.
Wonderful. All right, everybody, have an awesome day. Like, comment, be happy, and we will see you on our next show.
One comment when you sign off. I need to ask you